All right, folks, here we are on Trading Up. We've got Steve Ruffley back in the show again now. You probably would have seen 3 of his Q&As by now, along with his interview and his short little video where he showed you a really transparent view of his account. And this little session is going to give you an update on that account and show you what can be done when you do trade with these larger lot sizes and how, taking a hit on an account isn't the end of the world. So, Steve, welcome back to the show.
Thanks for having me.
Let's get on with it because you've got a wee sort of, I suppose, story to tell around this. So let's start off by you can share your screen and we can have a look at some things. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
Yeah, I think the big thing for me is that, doing this stuff for years, people always, have that kind of idea that, people that can trade, people that can't teach. And, I've had that a lot. And, you talk a good game, but can you really do it? So I'm, here today to say the last time we did that video and I was showing, all about trading big size, using leverage, all the kind of techniques I use. And that was a down account. And, basically, I can run through a cycle of probably 6 weeks of trades where I'm up now over £100,000. So plenty of people out there won't have ever seen that kind of money. Now, obviously, there's going to be some withdrawals in that because I've been, making money and not trying to over capitalize my account. So when I've been making money, I've been taking it out. And basically what we'll look at is, kind of all the things I've talked about. So when I'm getting into trades and, doing these 80 clips and averaging into positions, I think, again, I probably stressed a little bit too much that, I'm always looking for a scalp and always looking to get out of the markets quickly. And that's one thing I'll clear up is when I talked about, looking at the P&L to try and get out of position with the big close all button. What I'm trying to do is look for a scalp. And when that gets to an amount of money that I want and it hits that top, then I'm closing all to get it out. Yeah. And then that's, because that's my real money in the market. And I've explained this before about, people, a lot of experts say don't watch your P&L. Now, I agree with that. You don't watch your P&L. You just look at the levels and the charts when you're running a position and you're looking to get out and you're giving it time. When you're trading individual positions and looking to get out for a scalp, you have to look at your P&L, especially because sometimes I'm trading products simultaneously, so maybe 2 or 3 products at a time in big positions. So you'll see massive jumps in your P&L, the way it jumps around, because a little bit of a move in one can offset the overall kind of net position that you're in. So what I'm saying about watching your P&L for yourself, that's when you're trying to get out for a specific amount or trying to even judge what your P&L and trade is doing and then getting out. So that was just to kind of clear that up because that was one of the comments that came out. Now, also, you've got to trade to the market conditions. Now, coming to December, just by being December, you're coming towards the end of the year. People are getting out of positions. People are getting into positions ready for next year. So I kind of moved slightly from a scalping strategy of that very, very quick, taking the profit the first time it's offered, to letting the trade run for a little bit longer. And you see the kind of results. So 80 lot trades here. These are all pretty much at a similar price because, again, I'm using one. I can only clip so much. You can't clip the size that I want. So I'm just going into the market, having that area of interest and then holding the position, not for huge amounts of time, but for a couple of hours, longer than I usually do. And that's, 5, 10, 15, 20, 25, 30. That's a 33 grand trade. Okay. So that's real. So that kind of took my account back to, 10 or 15, 20 grand down maybe. And then again, you see you come through your other trades, not quite so big. You've made some of your profit back. So you got some 4 lots in the euro dollar, then up to these 20 lots. Again, not great trades, but it's all about keeping that momentum going. Okay, so you've chipped back at your loss and then you're going back and to try and get to that 0 and then pull the market up. And then again, some 4 lots, some 20 lots in the euro dollar. Again, not immensely great trades. And then again, bit of a loss in gold there. But then, netted it out, a couple of more 80 lots in gold, quite a big trade, kind of 80 lots in is gold is getting right up there. Then again, some UK trades at the same time, a loss. And it's like no harm, no foul. Basically that's a flat trade. You don't have to get too worried about it. And then you come in again, start with the the euro dollar, bang, more size, 20, 20, 20, 20. And you're getting up to 120 lots or so. That's big size. In the euro dollar. And you start to see the wins add up. So 1600, 7 grand, 7 grand, 7 grand, 7 grand, 7 grand, 7 grand. So in that trading period there, between 9, that's quite a long trade for me. We're talking about 7 or 8 hours, but that's $1,000 an hour in each trade. Pound sterling. So you're talking like a 60 grand day. So as I said, I'm not concerned when I've got a down account, because when you can make £60,000 in one single day, there ain't many people out there that can do that and not can show your account to do it. So again, start taking some money out, because I don't want the account to get too big. I can still make money when I've got the money in the account. And again, a series of quite good scalps, some decent size, 80 lots, 67 lots in the UK, in the FTSE 100. Again, not going to change your world, but 2 or 3 grand up. And then this was a particular day that we're going to come up to. And it was just a great scalping day. I was just getting in, getting out. Bang, some nice 1,000 days, kind of every trade's green, every trade's up, you're not taking that much stress. And it's probably, again, coming down to these other trades, you're having relatively small wins, but then also, relatively small losses. And that's trading, again, things at the same time. So trading gold and the euro dollar. So things with, indirect correlations. So you're kind of getting 2 bites of the cherry. And, again, it's just kind of scrolling down, again, putting some more money in, taking some more money out. And then we get to kind of like the end, it was a little bit of a gold loss when we were trading. Again, this is the kind of sign of my kind of confidence. I was trading the Fed, and I kind of, 12 lots in gold. Didn't kind of fancy it because it was more of a scalp rather than a position. Got out for a couple of grand loss, and then gold absolutely tanked after that for the next kind of couple of days. But that's, again, it's this idea that sometimes I'm not always scalping. Again, when the market conditions can change and you get these heavily directional moves, I want to be getting more out of the trade. So it's almost like the money's not less important anymore. It's more important to kind of understand that when you're scalping, I say it's a crime to leave money on the table, but you have to understand when the market conditions change and you get these overextended and breakout markets, that you need to get more out of the trade and more out of your time. So you go from banking that money that you see first time to that being an indication of that you're right. The trade is going in your way. And that's when you start to set, monetary targets. You start to set, your kind of points of interest and levels on the outside and let the market go to where you are. So, yeah, I mean, again, at the end of the day, when you're making these kind of size of trades, and you get your trade to run on, even £5,000-6,000 and you have them, multiple positions, then a 40-50 grand down account is nothing. And then all of a sudden, you're back, you've got that momentum, and every trade seems to be a winner and you can't lose. And that's the kind of way trading goes. Until then, invariably, you have a big loss and have to start the process again. But, this is the kind of thing that kind of always really sticks in my mind when I'm trying to portray what I do to other traders. I never tell people how I trade or encourage them to trade how I trade, because that's the style I've come to. I like to be, in and out when I'm in and out mood and don't want to spend much time in the screens. When I'm camped out in front of the screens, for maybe 6 or 7 hours, I don't enjoy doing it, but then I want to get paid for that. And that's when the big days come. Okay, so you can scalp and make you 2, 3, 4, 5 grand, but if you want your 10, 20, 30, 40, 50, 60 grand days, you have to be sat in front of your screens and actually do some hard work. And that's just the way it goes.
Cool. Now, so just to clarify, so I saw there in the screenshot before you had $10,000. Was that the original deposit, was it?
No, I mean, the account was pretty much where it is now. I think it was about 160,000. And that's again, with some losses that I'd had. So the account's down to 133, and, because money's been taken out. But, I mean, the overall kind of profit when it was down has gone back up. I mean, I've got all stats. Do you know what I mean? It's kind of like this particular account that I've shown you that I trade, because I trade multiple accounts. You see, this is one trade where account where people put money in. So it is not all my money. People put money in for short periods of time and want to see those big trades, and then they make some money and take it out. So it's quite a rare fund, you see, because it's one of these things. Anyone could put the money in at any point, and anyone could take the money out at any point. So you don't know where you are day to day. So from a kind of scaling perspective, it's quite difficult. And not many people do it that way, because you might have a 200 grand account one day, then a 50 grand account the next day. But I keep enough money in to make sure that I can trade the size I want to trade. And as people put the money in, they can put it in and take it out, and I charge a performance fee. So that's how this account works.
And are you able to drag any of those trades, or maybe the ones that were on the 7 grand ones, I think it was, if you go back to them, drag them onto the chart so we can actually see how the trade played out? So again, it's most of them are just kind of directional. So again, it's worse the big ones. Yeah, those ones. Yeah, that's
7 grand. So going
on the
back to
Euro GBP. Yeah. So mate, that would be quite interesting if you could get a Euro US dollar chart up, drag those on, and it should draw the little trade up.
17th. Yeah. Oh, you drag it. I've never done that.
You've never done it. So if you just drag it onto the Euro US dollar and then open that chart up, you'll see that trade.
Oh, mate, you'll learn something new every day.
So wherever it was, however far back it was. Yeah, that's the one. And if you can't find it, I know a way to quickly find it.
Yeah, go for it.
If you right click, and then go object list.
Yeah.
And then you should see, if you scroll down to the bottom, it'll be the last thing you put on. There you go. Just click on that cell 4. Just click there.
Yeah.
And then go show at the top. And then click X. Close that. Yep. So it should be at the left-hand side of your screen. If you scroll left a little, that's it there. Okay. So that's the trade there. So it'd be interesting if you drag the other 3 on, or 5 or 6 on, wherever many there were, just to see. That you'll have to go to the terminal down the bottom, where you've got your trade list.
Oh, yeah.
So that's view terminal at the top. Yeah.
Control T. I know that
Control T. I didn't know that. So there you go.
There we go.
So you taught me something. You just drag them all up, and they should just paint those trades up on the chart, so people can get a good feel for how the
absolutely. I mean, this is the great thing. MT4 is an old platform, but it's a good platform. Everything you need to do is there. You've got to just kind of, find out where it is.
Righty-ho. Okay, so they're all pretty much, this is what, the hourly chart?
Yeah.
So they're all pretty much grouped. 15 minute, what does that look like? Which way will it be? It'll be that way, yeah, there you go. Okay, right, so you're literally getting in at a sort of very consolidated area just to get that size on.
I mean, that again is the thing, it's kind of, you've seen, it's, again, one of these kind of risky kind of trades, because, you've seen a lot of selling, but then the market bounced up. But then, when it kind of really kind of goes down, that momentum kind of, really carries on. I mean, it's 15 minutes. I hate the 15 minutes. Let's do the hourlies. So for me, it was a basic, fib trade. I was, looking for that 50%, to kind of get back to, and was that's again, that's knowing and trusting, the kind of, when you're looking for an overall view. I mean, at the end of the day, I've only ever said I sell a euro high. Only ever said that. I've gone through the 8 charts, and for 10 years I've said, I sell gold, I sell the euro, buy dips in the dollar, buy dips in the pound, buy dips in the stocks, and that's what I've done. So when I'm coming to do a trade and be a bit more aggressive in things like the euro, I'm always looking to sell it. So again, I was basically consolidating around the 23.6, and again, it's all about, again, the fib, don't make a new high. That was rejected here, double top. I'm not going to say that, this is exactly the methodology I used. I wanted to sell the euro dollar, and I'm selling at market, so I want to sell at an area of interest. And that's why, again, over the last few months, people have been losing, kind of money, because they've been too regimented. They've not allowed for the market to change. They're expecting stock markets to bounce, because that's what they've always done. They're expecting things to, to range and kind of come back. And what I'm saying is, towards the end of the year, when people are getting out of positions, markets will start to trend a lot more aggressively, and there might be some of the other side, to kind of make it bounce and to make it range. So I'm looking to get involved in an area of interest. I know that I want to trade, pretty good size. So I start a little bit small. Then when that kind of goes in profit on my way, heavy. Again, not too interested in the exact price. I'm looking at an area of interest, okay? And that's the other thing, that I want to kind of touch on. When you put a big trade on, it's very difficult to stick to, your overall risk reward, because it might cost you £10,000 to put 160 euro dollar trade on. And that's what I call something to do with, open and closed risk. So my open risk is my P&L. So I know that it's going to be costly to put a big trade on. So I can't set my stop of 10% account per se, because that might stop me out of the trade. That's your closed risk. So when you're trading, with the mind to putting big size on, you have to factor in that it's going to cost you in the spread. It's going to cost you each time you average negatively, which you want to do anyway. Because it's, it's the kind of, that's the way I trade. So you've got to factor in that there's a certain percent that your P&L has to swing just to put that trade on. And remember, 5, 6, 7, 8, 9, 10,000 pounds down an account when you're trading this kind of size can be flat in a matter of minutes. But this is the transitional thing that people don't get to. When you can trade, a couple of lots or a couple of pounds a point and your P&L's binging around £5, anyone can deal with that. It's nothing. When your P&L goes up to hundreds of pounds, it might make you think a bit differently. When it goes up to thousands and tens of thousands of pounds, that's a different mindset between the retail and the pro retail and the professional traders. It's just that size. It's just the numbers. It's the same trade. But I tell you now, there's a difference between a demo account and a real account. Your real emotions are challenged when you start seeing those big numbers, because it means something to you.
Now, but we'll finish up on this question. So, at what point in this trade, had it gone the wrong way, would you have gotten out?
Well, I mean, this is the thing. You would say if it got above, the double top and was heading to make a new high, that you're probably not wrong necessarily on the trade. But my old saying, right at the right time, you would have taken a pretty hefty loss if it got above here. So again, you're taking the pain here. You're thinking, trade's going down now, we're going to make some money. That's your scalping mentality. 20, 30 pips, you're out, well done, walk away. Market takes it all back. We don't like that. Oh, now we're offside again. Am I wrong? Why won't it go? Oh, I'll probably get out. 3 hours into a trade, and then you think, I'm squeezed out. It's too much. Just take that, that small loss. Then bang. Nope, one more time, and then the real selling comes in. You have to wait, a good 1, 2, 3, 4, 5, 6 hours. But then once it starts going, again, then the real moves start to come. And I got out towards the bottom of that candle. And again, I could have held and made, even more money. But, there's a time and a place for me. I'm never, no matter what style of trading is, looking to get the entirety of the move. I'm just trying to look, get a good meaty part of the move. And that, again, for me, from a scalp perspective, when I generally would just be trading the end of that candle, to then give it back and then to hold on and then wait. It's quite a rarity for me. I really have to believe in the trade. And again, maybe it was the pressure of coming towards the end of the year and being down. Maybe it was just the kind of just different things you see. Because again, it's because I trade different accounts. You emotionally attach to these accounts in different ways. So for me, this is kind of I can't be down. I've never been down an account, all year in 20 years. And then, maybe you push yourself that a little bit more. Or maybe you go looking for that trade and, you want to kind of make that extra money. And it wasn't, again, just the one trade that got me back. The one trade got me back to, a small loss, and I could have cut it off there. But that momentum dragged me back in, and I took some other good trades, and kind of, bang, 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 bang. And all of a sudden, you make that 100,000 in a month, and you think, well, that's what I'm here to do. That's what I've done my entire trading career, and the big money's where I'm after. But it was a different journey in this account, going from down to up. In the other accounts where I've been pretty steady and just kind of making money, I haven't had the big swings, but then haven't had such big winners because I've not been trading off the back of a loss. And then, that momentum is the most important thing in trading. And again, when you get to that flat feeling and you've been down all year thinking, why is it so hard to trade this account? And then you go positive, then all of a sudden things start to become almost too easy. And that's where I'm at now, where I don't want to push it too hard. When I heard the Facebook, earnings come out, I traded a bit of NASDAQ, and it was only small size, and I wasn't really kind of paying attention. And you made 500 quid. In hindsight, that could have been a 20 grand day if you're trading your 80 lots and you clip. But it's kind of then, you kind of want to start protecting the money that you've made. You want to keep that momentum going. So that's why I enjoy having like lots of different accounts that I trade, because, that's what I'm great at, especially in life. I'm like a social chameleon. I can fit into any, kind of situation. And that's how I feel I am with the markets. I'm trading that market or those markets with that account, with that kind of baggage or that kind of, that kind of mindset. And it's like, right, when you trade a down account, it's like doing your school homework, isn't it? You don't want to do it, but you have to do it. So you've got to trade, you've got to make the money back. And then it's kind of like, you feel like that. Then you trade the account where you've just been up all year and you've done nothing but made money, but then you might nick 10 grand. You think, well, I'll just put 10 grand in. It could have been a 100 grand trade or a 50 grand trade, but you put that 10 grand in because, it's just free money. It's easy money. You haven't had to work that hard because that account's always been positive. And this is the difference, when people get so fixated on the one account that they have. It's all or nothing, isn't it? Everything's all or nothing all the time. That account's up. Yeah, that account's down. Oh, it's the end of the world. And I'm having that conversation with people right now because the market conditions have changed and what was working and back tested, back through the last 6 months has suddenly been turned on its head. And, the kind of, look at the markets right now. Again, yesterday, that sell-off in the NASDAQ dragged all the other stocks down. Where's that buying the FTSE come from? And the S&P, it just, some things you just can't explain. I can say we're around some technical levels, but, you don't just see the markets close and then, the rest of the markets rally. So you've got to change with what you're trying to kind of achieve out of the markets. That could be down to, changing, the size you use or the time period you hold the trade for, but recognizing the market's changed and that you have to change your trading style accordingly and maybe your emotional mindset. That's key because nothing stays the same in the markets.
Well, look, Steve, thank you very much for sharing with us all this stuff because it is very, very transparent and probably, I'd say, the most transparent we've had on the show almost. Mm-hmm. Look, let's wrap up. What's the best way for the guys to get hold of you?
Well, as always, just Google. I spend a lot of time on Twitter at Steve Ruffley, but I'm always happy to speak to anyone who's got an interest in trading and kind of wants to take that next step. And again, like I said, for me, it's £133,000 account that I've got now. It sounds like a lot of money, but it's not. It's not a lot of money. But if you want to kind of make those kind of big returns, you have to start with the right kind of money in your account, and you've got to start with the kind of, like a business. You've got to fund yourself in the right way to get over the bad days, to pay the costs, and to make those big wins and to trade when you see the opportunities. And this is the thing that I've always been transparent again about is that it takes money to make money, and that will never change in trading. And a lot of people think that, just because I have money, it's easy for me to say, but I started with nothing. Everybody else, well, not everybody else, but I started with nothing and I built up and I found out how to make money in trading was to have big money. So I got to that stage and I never looked back. I never went back to trading small money because I could never replicate what I did on a small account with a big account because it's just impossible. So, as I say, I'm always happy to talk to people about it. And, again, if there's comments come through, we can do another video and answer them. But as I say, really for me, it's all about just I'm trying to be transparent and say, that I'm an educator, I'm a mentor, but I'm also, first and foremost, a trader. And my job is to make money in the markets. And that's what I've done for 20 years, first and foremost, is make money.
Hey, guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com or there is a link in the description. Cool. Awesome. Well, look, guys, thank you for watching. Do remember, hit subscribe, hit like, and click on that notifications bell, click all, and we'll see you in the next video.